Welcome to Founder Files, the podcast for growth-minded leaders, investors, and operators shaping the future of business. Each episode dives into the critical decisions behind scaling, from finance and fundraising to leadership, strategy, and technology. Founder Files is powered by Cypher, the AI-powered and human-led finance partner helping growing companies scale with clarity and confidence. Learn more at cypherfin.com. Hi, everyone. This is Selma speaking. I'm introducing Bayaan again for a second part of our tax episode. Bayaan is the CEO of KTB Services. He is a CPA, a tax advisor, and also a PwC alum, just like me. I'm super excited to have him on this episode. We are learning so much about tax compliance, tax optimization, planning. This episode specifically will talk about how to structure your finance team. Is your tax accountant, your CPA, your EA enough, or do you need a finance team that helps you year round? Stick around, enjoy the episode, and see you again soon. You did mention a few of them already, but what are some things you'll look at or you look for to see if someone is overpaying their taxes? What's the first thing?
Super important. I look at the entity structure, right? I always say I'm a tax advisor first, and I'm forward thinking. And the reason why I said tax advisor because CPAs, we are inherently historical looking, right? So what makes you an advisor is, hey, yes, I understand what your compliance looks like from a tax perspective, but now I'm thinking about the future for your tax perspective. I'm looping in your CFO, I'm looping in your bookkeeper, I'm looping in the whole team and say, hey, this structure doesn't make sense. We can't change what's happened in the past, but we should consider this. So to your point, I look at entity structure.
Okay.
Is this person in the most tax efficient structure with their story, with their vision, and with what they have going on? Because all that, they could be in the right structure, right? They might be required to be a C Corp. They might be required to be a partnership. They might be required to be an S Corp. Whatever the case may be. It doesn't just have to be law. It could be investors. It could be personal, whatever the case may be. But once we look at that, then we could start the conversation and say, hey, have you thought of being this? It still solves this problem, but now, as a C Corp, just using it as an example, you pay less taxes, right? Because one of the biggest, I would say the biggest changes with the Trump Act or the TCJA of 2017, I'm getting technical, it turned upside down the corporate landscape, where corps used to be taxed at 34, sometimes 35%. Now they're taxed at a 21 flat rate. No graduated rate. So that was huge, right? So there's scenarios where, and when I was at, even now, we do analysis of, should we be an S Corp or should we be a C Corp? So there's scenarios where their fact pattern, it was more advantageous that they were a C Corp. They're paying less taxes. They don't, need much out of the company. So it made sense. So I'm giving you a super specific example just to give a flavor of, we look at all this and we provide that guidance. And then now it might be too much of a headache to do that. So we try to chip at it. What else can we do to really optimize this person? But I'll say that's probably one of the biggest things. What is their structuring? Does it make sense for them at this point in their life or career?
Yeah, glad we had that conversation to begin the episode then. What about write-offs? Do you have some crazy write-off stories? Some crazy questions of what can I write off or?
Yeah. You know what? And I'm going to, I think I'm going to go back to your earlier question of what do I look at? Outside the structure as well, and I'm going to be blunt. If I don't trust their accounting team, their bookkeeping team, or their back office team, that's already a red flag. Because I would say the biggest tax savings is proper books for a business owner.
Wow.
If their books are up to date, that is the biggest tax savings because I know nothing's left on the table. Right? Because garbage in, garbage out. So if the accounting and the financials are off and there's things missed, there's a lot of commingling, or we're already behind. Right? Now we're just hoping we can capture this. And then not to mention, it's a red flag. If you get audited, the IRS could just put a goose egg on, this doesn't make sense. This is all high level. This is estimated, no lunch for you. But back to your question of write-offs available. I've heard some crazy ones. I could probably go on all day, but ones I've heard is, as crazy as it is, there is a pathway for it to being real, but 8 times out of 10, and that's me being conservative, it's probably doesn't, pertain to that particular person. So I've seen, hey, can I write off my dog? Right? I think I should. my dog accompanies me to work. They'll try to make it where it
Wow.
can make sense, but we know it doesn't make sense. And I've been through a lot of audits where I'm dealing with past professionals' messes or current messes because sometimes the taxpayer wasn't forthcoming. But at the end of the day, the IRS examiner, and I'm giving a real insights to like how to survive an audit. The first thing they see is, can I trust this taxpayer? That's literally what they're asking. If that is a no or a maybe, now they're out for blood, which is where you want to have your ducks in a row. So seeing a dog written off and all the expenses that has to do with the dog, I mean, dogs are amazing. You are going to be in a long ride for that examination.
I love that. That was needed that good laugh.
Yeah.
But what you were saying, Bayan, about the finance team or fractional finance team with the CPA and tax advisor are so complementary. That's obviously music to my ears. Tell us more about how you think a CPA and a tax advisor, alongside a fractional CFO, work together to prepare for
Yeah.
year end, optimize
Yeah.
taxes, cash flow optimization, etc.
Super important. CPAs, and of course, we're trying to rewrite the stereotypes. A lot of business owners like us or advisors like us, a lot of CPAs are like, oh, that's just the accountant, right? But at the end of the day, your CPA and your tax advisor, they could be one and the same. However, too many more times than not, they're only just focused on filing your taxes, and that's it. And like, oh, do you want a projection? Which is, that's where we hurt ourselves, I would say, in the profession. However, that's why I always say I'm a CPA and tax advisor, right? Because as a tax advisor, a true tax advisor wants to loop in everyone else on the team. Like, I play very well in the sand where we have clients that have their in-house, right? They're a lot more mature. They have their in-house finance team, CFO, bookkeeper, all of that, and then they have a CPA and they also have a tax advisor, or they have both. But majority of where we play in is the fractional world, where a lot of business owners, they don't have, or per se in their budget, to pay for a full-time bookkeeper, full-time accountant, full-time controller, full-time CFO, which created the market for a lot of fractional or experts like yourself, where you can come in with a back office team and with less of the cost of a full-time person, but delivering more of the value, in my opinion, for that client to have real-time financials, books up to date, and also advisory where you're thinking about cash flow, because that's the lifeblood of any business, but also that is in tandem with the tax advisor CPA, where they're like, hey, we know we have to pay these taxes. We've already budgeted for that. We've exhausted all the tax advantages available to us. So now everyone feels good, right? Because the worst thing I've seen, a lot of clients they're okay with paying taxes. They just don't want to feel like they paid more than they have to. I would say that's a reality. And, we both have some really high net worth clients generating real cash flow. Yes, everyone, the holy grails pays zero taxes, but they just don't want to feel like we're leaving stuff on the table where no stone unturned, right? And I think the better the team and they're more in tune and cohesive, even if it's fractional, I've seen it work very well. And, I can say we're a testament to that, where you can work in tandem even though it's different companies, right? Versus, of course, in a company, if everybody's in-house, that obviously is more cohesive, but I've seen that the other way where no one's talking to each other. So it just goes to the point of, communication, right?
Well, there's different strategies. Some CEOs may think, well, let me hire a full-time bookkeeper, a full-time accountant, but for that price, you can actually get 4 or 5 experts to work
100%.
together. Each one of them
100%.
brings on their own expertise, and you have different fractional teams that actually will be an extension of your company. Most good fractional teams today will act as if they were your in-house team members.
Agreed, because they want to deliver more value than the cost. And I've seen scenarios where it doesn't have to be the end all be all, right? Like, I've seen some scenarios where the business owner has an in-team bookkeeper where they have to do the day-to-day because it's a lot. However, then I've seen that's where a fractional CFO makes sense, because then now they can bird's eye view or high level and fully focus on forward strategy, cash flow, financing, because a lot of people think the CFO level is just accounting, but I think it's part of education wise too. The CFO, I feel is the most important, because they're always thinking about the future. Yes, inherently you have to think about financials and make sure everything is up to date, but you have that house in order. Now you need to think more strategic. Do we have enough cash in the next 6 months, 12 months, 2 years, 3 years? Can we buy another business? And this is where that value matters. I've seen it all work well, but the business owners, I think we have to educate them on making that investment of the fractional world, especially if they might not see the value of having a full team in-house.
I agree. There's a small nuance here. There's also a
Yeah.
lot of founders and CEOs that think that having a CPA/tax advisor is enough. So they just double bank statements on them at the end of the year. And oftentimes it's because they think that, again, they don't really value the fact that a CFO or fractional CFO can bring on that strategic guidance, but also they think about cost, feeling like, well, I need to save costs, so I'm just going to have my CPA do the books. Well, I mean, aren't you missing out of a whole year of proper financial
100%.
reporting to make good
100%.
decisions? And also, most CPAs, will have an hourly rate, and if you bring them bank statements at the end of the year, you need to pay the hourly cost because they're going to be cleaning up your stuff for the whole year. And that could be just as expensive, if not
Expensive.
more, than having like a monthly fractional team and also your CPA to be there with you monthly to plan your taxes and give you that strategic guidance also on a compliance side.
No, you make another very great point and important. And I think I always reiterate this. It's education as well, and I try to educate my clients as much. I have a vast amount of clients, and we have mutual clients together. I feel like it's our duty, or even my duty, to educate them. Say, hey, listen, this is my bandwidth. This is what we can handle. I think you need to bring in help. Right. And that's that educator like, oh, but you're a CPA, you should know this. Yes, I know enough to be very dangerous, right? Like, I'm confident in my ability. However, my ability to loop in my partners and loop in other experts is super valuable. And I think that's what you have to read to a client. And now you could say all this and the client was like, I'll just wait till the end of the year, but it's to their detriment. But it's that reiteration. And I've seen clients like, well, how did we miss all this? That's because you don't do bookkeeping throughout the year. You're like, I'm fine. I know where my numbers is. And I believe that. I trust a client, a business owner, has a gut feeling of where their business is, but that's just to that level. That's just the intuition. I'm talking about at any point in time, do you feel your books are up to date? If the bank you're financing and they need that, do you even know what to do, or you just send them over, and which could hurt you? That could hurt your financing. And I'm using a specific example, but it's a very common one in the SMB space where they give it to the bank is like, this looks crazy, we're actually going to cut your funding or reduce it, and then now they're panicking, and now you have to pay a lot more, versus where good bones and good foundation is super important. So there's a lot of CPAs who they will provide CFO services. However, I always caution and say, hey, be clear on scope and what you're getting, which is, again, back to the education. I'm like, what do you get? Because I've had clients that I've came in as a tax advisor. They're, oh yeah, we have a fractional CFO and they could do it all. I never bash another professional because, everyone, has something to bring to the table, but I always educate my clients, say, hey, be clear on what you're receiving, because if the deliverable is not clear, the lines get blurred, and then now they don't see the value of even having both, and they're like, oh, I felt like I was investing and paying all these costs, but I don't see the value. But that's where I feel the scope was not aligned with.
I agree. I think to each their expertise, right? Like for instance, being a fractional CFO company and doing also accounting, financial reporting, etc., we need to know compliance at a reasonable level. We need to
100%,
understand
yeah.
what's going on so that if we do see that something is off and needs to be worked on, then we bring on the partner that is actually going to add the value. It's the same way I do with you, Bayaan. Hey, Bayaan, I have this client. I think you need to talk to them. But could we do taxes? Yes, of course. But it is not our expertise. That is not where we thrive. We prefer to thrive in the forward-looking, also in the financial reporting and in processes, etc., and really let the tax experts come in as our partner to complete us on the compliance side and help with tax advisory, with having the right structure, with tax optimization, etc. Things that they really spend days and days learning about and working on.
Yeah. No, it's super important. And just to even give more flavor, I've seen different stages. I've seen where the client looks at me and say, oh, you're my CFO, you're my CPA, and they have nothing in the bank, right? They just started. Yes, potentially, right? But I've seen clients scale very quickly, and I'm like, hey, at some point, you're going to need a fractional CFO. I'm not even talking about an in-house. Like, that's down the road, but you're going to need a fractional CFO as you scale, because investors, they want to see that, right? And investors there's a lot of sophisticated investors where if they see that, the CPA is the tax person, the CFO, the accounting person, there's also those questions, and they want to validate that. Now, they could pass the muster, but most of the times, right, it's then they're all over the place, especially if the client is fast growing. And I've seen a super hockey stick, and I call that in the graph of a client where day one, they were nothing, and literally month 12, they've had super growth where they needed a full-time team in-house thing. And great problems to have, but me knowing my bandwidth, I was very, very clear from the beginning. I was like, I see the growth and this is real, especially this is in healthcare, and they needed a full-time everybody, right? Where now I think it actually helped make me a better advisor because now I could really just show value in what I can do in my sleep, which is, tax advisory. So
Agreed. That's amazing. Thank you for all of this insight. This is really, really helpful. I think a lot of people are going to have some really good takeaways before the year wraps up. We did talk about tips, before year end, and we're going to put a checklist together with your help, Bayaan, to make sure that it is as complete as possible.
100%.
We'll be able to share it in a link either on the description, the YouTube description, or our website, and your website as well, Bayaan. So if you want to have that tax checklist before the year wraps up, make sure you go and download it. Bayaan, thank you so much for everything today. Anything else I missed or we should have discussed, could have discussed?
No, I think we covered a vast majority. I'll probably just add in a couple more tips for year-end tax planning. A lot of states, especially if you're a pass-through, if you're an S corp or a partnership LLC, take advantage of the pass-through, the state pass-through tax deduction, which allows you to pay the state taxes and get a deduction on the federal level, which could be huge savings. So talk to your tax advisor, CPA, or we're happy to help here to help you with that. Also, you want to make sure you have spoken or you're speaking to now your current tax advisor of the new law that just passed during the summer, OBBB, which is super important because there's a lot of things that are advantageous to business owners. I think I already mentioned one of the biggest things with the expensing 100% bonus depreciation, R&D, the whole landscape is changing with that. Interest limitation, right? I'm just throwing out there that, and again, it's not your fact checking, but you want to ask your advisor, say, hey, I want to make sure I'm not leaving any money on the table. I want to make sure I'm tax optimized. Where's our projection? What does that look like, right? So, and if you need any help with that, we're here to help.
Yes, and we'll write that down on the checklist. What do you think, Bayaan?
Yes, definitely.
Awesome. Thank you so much, Bayaan, for today's episode.
Thank you for having me.
Cheers to the next one. I'm sure there's plenty more to discuss.
Definitely.
Bye-bye.
Thank you. All right, have a good one. Bye.